Hi, I'm Phil Grandy at philsgang.com. They're telling us everything's going to be fine. There's not going to be a recession. Well, that's not true. There is going to be a recession, and I'll show you why. Now, the one thing I want to talk about is this inverted yield curve. This sounds complicated, but it's not. It simply means that when banks borrow money, they borrow at the rate of 3-month Treasury, whatever that rate is of a 3-month Treasury. And a 10-year Treasury yield gives you a good idea if the market is going to go up or the market's going to go down. Pretty simple, isn't it? If you have the 10-year Treasury going up too much, I'm not going to buy stocks because I know it's got a higher probability going down. And if I see the banks, instead of paying 1% for money, are paying 3% for money, whoa, that's real bad. Remember, banks, their job is to get money out to our system. It's oxygen. The big oxygen is to take care of the small businesses, the startup businesses, because they're the backbone of our country. 65% of our jobs come from small businesses, so they got to keep them going. Now, when you're investing in stocks, I never listen to the Federal Reserve because they're always wrong. The yields are never wrong. When I see the yield going up, it's telling me there's a high probability the market's going to go up no matter what anybody says. And it's always right, or vice versa. The Federal Reserve is always wrong. You know why? Because they're not here to serve us. They and the fake business network try to tell us what they think we want to hear. Remember, they're serving whoever the president is in the party. That's who they serve, not us, the people. So, just like the other day, they told us that, isn't it interesting, in 2023, the stock market outperformed the 2022 market. That wasn't true. It wasn't true at all. In fact, in 2023, unemployment increased more than 200% than in 2022. So how could that be? How could your unemployment be up 200% more in 2023, but yet the market's doing better in 2023 than 2022? Especially when we had higher deficits, higher debt. Wasn't true. But it didn't matter to me because I follow my yields to identify if when I'm going to invest, if I got a high probability of the market going up or down. So let me show you. If you take, for example, this chart right here, this shows where we started in 2008, back here where the crash was. Now, an inverted yield curve, what does that mean? It sounds so fancy, so it isn't. Let's take, for example, in 2012, the 3-month Treasury, what they're paying for money, was 0.1, 1/10 of 1%. That's all the banks are paying for money. Well, that's pretty good because they can get a lot of money out in the system. The economy's going to grow. So that means the stock should go up. But now you look at the 10-year Treasury, 1.6%. Well, that's good. That tells me the economy should grow. But now I'm going to look at today. It tells me banks are borrowing money not at 1/10 of 1%, but 5.4%. Whoa! What does that mean? That means the banks are losing money in their loan portfolio and their bond portfolio. That's exactly why the 3 banks went down in March, the 3 regional banks, because they were losing money in their loan portfolio and their bond portfolio. So let's take a look and see what happened between 2012 and January 2022. Well, during that time, what banks were paying for money was 1/10 of 1%. Now look at 2018, it went to 2.3%. Whoa. And the 10-year Treasury was 3%. I told my members we better start selling short. If you remember, It was in January, I called the market. I said, we're going to have our first crash since 2008. And we did, 2018. How did I know? Because I saw that banks were now paying 2.3% and they were making less money. Remember, the banks is the oxygen machine. And when the banks have to pay more for their money, less loans go out. That means the economy doesn't do as well. And when you look at the 10-year Treasury yield at 3%, that's telling you there's the big boys, the institutions, aren't going to be buying stocks. And the market went down about 20%. The big problem was here in 2020. All of a sudden, the yield inverted. Now, what's that mean, yield invert? It just simply means that the 10-year Treasury yield now becomes lower than the 3-month Treasury yield. So that becomes a problem, because if the 3-month Treasury yield is higher than the 10-year, that means money is more expensive, and it means a recession is coming. That tells me to short. And I had my members short. See, remember that crash? But remember what an inverted yield curve is telling you. You're going to have a recession. If you don't have a recession, it tells you better sell because the market's going to go down. And it did. How does it get inverted? How does the 10-year Treasury yield all of a sudden become lower than the 3 months? In other words, you can go and loan to the government money, and at 3 months they'll give you 1.6%. Instead of loaning at 10 years, you get 1.5%. Everybody's going to loan at the 3 months, right? Well, that means there's a problem. It's not that the government's nice. The economy's in trouble. So now they're offering you more money at a shorter period of time. But that's costing the banks a lot more money, and their profits are going to go down. That's called inverted. Finally, we're at an inversion now that is crazy. Banks have got to pay 5.4% for money. Well, how's the market going up? Look at this. We had another inversion in October. After the market crashed, we had another inversion. We had 2 inversions. Oh, and don't worry about that. So banks had to pay, no more were they paying 0.1% for money, the banks, to loan to you and me, or even 2.3%. They're paying in October of 2022, 4.1%. You know, the October low, that's where the market's going to rally. And the 10-year Treasury was at 4%, not at 0.8. So who's going to buy stocks when the 10-year Treasury is at 4? Very few people. What banks can make money when they're buying at 4.1% instead of 1%? They can't make money. So that's why there's no buyers. But yet, look at the market rallied. What? And here we are today. The 3 months banks now have to even pay more money, 5.4%. And the 10-year Treasury's at 4%, 4.1%, even worse. But the market's rallying. How'd that happen? They rigged it to work. It's called financial engineering. So they went in and they printed $2 trillion, gave it to the banks to prop them up, to keep the banks up there. Okay? And so that's how they've been holding the market up. But we know one thing. The market can't withstand where banks have to pay 5% for their money. So the banks have stopped lending. And when the banks stop lending, you choke the oxygen off to America. And it's just going to wither and die. But they're telling you everything's fine. No, it's not. So you're not going to get the institutions buying stocks, and the banks can't loan and make a profit. You don't think the market's going to go down? Just going to keep going up? No. Remember, this whole thing from 2008 to 2012 was to keep the yields down, so to push the 7 big tech stocks up. Think about that. For 10 years, the market was financially engineered through these yields to push the 10-year treasury, to push the tech stocks up. But guess what? Now we got to pay for all that. Now we got to pay for it. And you can see we're going to pay for it. 3 months at 5.4%, banks are going to be closing their doors. In a 10-year, if 4%, the smart money institutions aren't going to be buying stocks. So there's only one place for the market to go, is down. The only way they could stop this and turn it around is do another QE. Print a lot of money, go and buy treasuries, drop interest rates back to zero. But guess what? To do that, you'd be paying $2,000 for a loaf of bread. So if you ever want to know what the market's going to do, just look at your yields. And by the way, if you want to know what a stock's going to do, check this out. This is a chart that we designed here at Phil's Gang to help our members. When it's green, it's a buy signal. We know the yields, everything's working properly. If it's red, it's telling you not to buy. And it works. You get to use this free for 10 days when you join our gang. Free. Well, I hope you now understand what an inverted yield is. That's bad news. But the market, remember, they always make all news great news. I'll see you on the chart. Go to philsgang.com, join for 10 days, free.